Horlicks Network 18, Mission Poshan, Bhavishya Roshan.
Today is the second day of the three-day monetary policy meet. This time around, a rate hike decision has become a probability from a possibility, courtesy higher headline and retail inflation. On the other hand, lack of clarity on the minimum support mechanism and fiscal risk may force the Urjit Patel-led committee to stick to a status quo. So the question, will they or won't they, holds more ground this time around. Ritu Singh is here with details of the CNBC TV18 poll. Ritu, what is the poll showing?
If you look at some of the factors that actually shape RBI's policy, simply put in poker terms, it's all in. I mean, a sharp increase in global oil prices has hit the Indian economy hard and the rupee along with it, which, remember, was the best performing Asian currency last year and now is one of the worst. The robust growth data that came in the fourth quarter has also caused some to see a rate hike coming sooner than later for the repo rate. But here's the big one. The key concern which the central bank has, for which it has kept the repo rate at 6% for a very long time, is the inflation rate, which is also widely expected to climb further from here. So the consensus is that the Reserve Bank will hike interest rates for the first time since January 2014. But the big question is whether it will happen in this policy or sometime later this year. Now, a CNBC TV18 poll says that 90% are actually expecting a status quo in this policy and only 10% are anticipating any sort of a hike. But all our respondents are very clear that there will be a rate hike in this calendar year. 80% say that there could be 125 basis point hike and 20% say that there could actually be a 50 basis point hike between now and December. The majority is also expecting a status quo as far as the statutory liquidity ratio is concerned, so no change on that front in this policy. On the macro parameters, however, all respondents expect RBI to keep the GDP forecast unchanged at 7.4%, the figure they gave last time around. On the inflation front, majority expect the CPI projection of 4.7 to 5.1% for the first half to largely be left unchanged. But in the second half, the respondents are divided, where 50% do expect the RBI to raise that forecast from 4.4% currently. So while the RBI is expected to stay on repo rates this time, it is also expected to shift its stance from neutral to hawkish. Why? Because they will acknowledge the risks to inflation that is now, much higher than RBI's target of 4%. But do remember, in the last MPC minutes, it was revealed that the tone of the policy itself was very hawkish, and that is expected to be this time around. And the highlight as well was RBI Deputy Governor Viral Acharya, who made it very clear that in all probability his next vote would be for a rate hike.
Absolutely. Thank you so much for taking us through those details, Ritu. Lata, you heard Ritu list out everything. What is your take on this? Will a rate hike be a good or a bad thing if it does happen?
Well, in the first place, the key takeaway for me would be that a rate hike is not a bad thing because, one, it is coming out of better than expected growth, and therefore output gap, that is excess capacity, has ended, and now if you don't increase rates, people will raise prices because the excess capacity has ended. That's a good thing, that shows demand has improved. The second thing is that the hike is already in the price. We have seen bond yields rise from Jan 1st to today by about 140 basis points, 1.4 percentage points. So much of it is in the price. The second thing is, therefore, what should you worry about? You should worry about how hawkish the MPC, Monetary Policy Committee, is likely to be. If the voting pattern is such that 4 people have voted for a hike and 2 have voted for a pause, then it would be dovish. If it is even 5 votes for a 25 basis point hike and 1 vote for a pause, it's okay. But if it is 5 votes for a 25 basis hike and 1 vote for a 50 basis hike, then maybe that voting pattern is indicating a little of a worry that the MPC is a little worried about inflation. And finally, you will obviously have to look at what is the talk and not just the walk. In the talk, one of the most important things you'll watch out for is the statement saying that, inflation has started to pick up and we need to keep tightening because inflation will get worse. This is the first of more rate hikes. If you get any sense of that, the market could get a bit worried, and everyone should worry about. Also, is the RBI at any point worrying that financial tightening, that is higher rates, is impacting growth? If that worry is coming about, then you should, it should make you think. As well, is it worrying about rupee? Indonesia, for instance, had to raise its rates because there was a run on the rupiah, or the rupiah fell a lot. We are nowhere near that. So I don't expect, even under abnormal circumstances, that the MPC will say anything about the rupee. But of course, one would watch out for that in the press conferences. And finally, what after this? You will have to wait for the Monetary Policy Committee minutes. People will take a view of what the RBI thinks of the economy, but a perfect picture will emerge 20 days later when the minutes come. So that's the next thing to wait for.
Absolutely, Lata. So no worry if there is a rate hike, but we have to pay attention to the talk. Thank you so much for taking us through those details. Moving on, escalating trade tensions and rising interest rates are the key risks to the global economy at the moment. That's the word from former RBI Governor Raghuram Rajan. Speaking to CNBC's Oriel Morrison, Rajan issued a warning over the ongoing trade tussle between the United States and other countries, saying things can get out of control very quickly. Onto a CNBC TV18 exclusive from the e-commerce space. A few weeks after Walmart bought a strategic stake in Flipkart, Amazon has decided to power up its Indian arm. We learned from sources that a few weeks after Walmart bought a strategic stake in Flipkart, Amazon has decided to power up its Indian arm. We learned from sources that Amazon is looking to raise its India investment from $5 billion to $7 billion. Kritika Saxena, who broke that story, joins us with the details. Kritika, what more can you tell us on this particular investment?
Well, let me put this into perspective first. If you look at the investment plan that Amazon has made in India, in 2014, they first announced a $2 billion investment in the country. After that, they increased that by $3 billion in 2016 to $5 billion. So the current amount that we know from Amazon side is last reported 2016 figure of $5 billion. We now understand that with Flipkart and Walmart now inking their $16 billion plus deal in India, Amazon is not going to be left behind. Expect Amazon to bet big, and we learn that they are likely to increase that investment from $5 billion to $7 billion. So that's an increase of almost $2 billion into the Indian market. And what my sources are telling me at this point in time is that it's just an initial figure. We are likely to see Amazon increase that over a period of time. There's no timeline that they have set for themselves, but expect Amazon to start ramping up this investment very soon. And official announcement is unlikely, but this is an internal memo, an internal strategy that has been disclosed to only the senior management. And what we understand from our sources that a bulk of this is going to come into the e-commerce story, that is Amazon Seller Services. While some portions may come into Prime and other services, it's largely going to be the e-commerce service. So yes, get prepared for the big e-commerce wars. When we contacted Amazon for a comment, they said that they can't comment on rumors and speculation.
All right, Kritika. So Amazon, they're upping its ante with regard to investments in India. Moving on, an SBI-led consortium of bankers has shortlisted 11 power plants for acquisition by new owners under the Samadhan scheme. Now, the name given to SBI's scheme of asset management and debt change structure. The power plants include Lanco Infratech's Anpara project in Uttar Pradesh and JP Power's Ventures Nigri project in Madhya Pradesh. Other projects under the Samadhan belong to Jindal India Thermal Power, KSK and In Bharat Power. The RBI's stress asset regulations require that resolution be reached in 180 days, after which the assets will face liquidation. So if the Samadhan scheme fails to attract buyers from these plants, they may go into liquidation in September. Let's hear out the Power Minister himself for more details.
You know, the SBI scheme is called Samadhan. So they are addressing those assets which are complete or near complete. And the idea is to carry out an assessment as to what will be the sustainable debt for these assets. Then the remaining debt, which is unsustainable, will be converted into equity, which will be held by the banks, the lender banks. About 24% will be allowed to remain with the promoters. And then the banks will bid out this equity to people who want to run these plants. The idea is that these plants will be run, and the idea is that the valuation which is achieved would be somewhere near their true valuation. That's the objective which we have.
Time to shift our focus to the IT sector. India's third largest IT major, Wipro, has rolled out a flattish salary hike this year to its over 1.6 lakh employees. According to sources, the increments are in high single digits for offshore employees, while hikes for on-site employees is on the lower side of the spectrum. Now, the high performers and those working in the digital space received a much better deal in comparison to the others. Meanwhile, in a letter to its employees, Wipro CEO Abidali Nimbuchwala said that the company will recoup momentum in the coming quarters. He also added that a salary hike was expensive this year and there was need to drive cost productivity. Swedish bus maker Scania has decided to shut down its bus manufacturing facility at Narsapura near Bengaluru. The company has said that this decision has been taken due to the lack of demand for premium buses in India. Rukmini Rao joins us now. Rukmini, what are you picking up?
Well, Volkswagen-owned company, of course, going on to officially announce that they have shut the bus bodybuilding business at the Narsapura plant, which is essentially the manufacturing hub for Scania in India. In fact, the reason given behind this closure, of course, being that of low demand for premium buses and also a slow order book. In fact, in a statement, the company has gone on to say that the premium segment in the bus business in India is very small and the numbers have not been sufficient to enable profitability of Scania, and due to which the operation has become unviable. What we've learned from sources is that nearly 600 full-time employees have been affected, and if we are to put even the contract employees, another 500, 600 together, close to 1,200 people have been affected. And of course, the company has gone on to say that they have given out severance packages for those who have been affected. But however, the company is yet to clarify on what is the road ahead really for the bus businesses, given the fact that they also had expansion plans in Thane. But however, the company has stated that it will continue its chassis making for trucks as well as buses here, and they also have quite a bit of ready stock as far as buses go to fulfill the order, and the company is yet to in fact to comment on the order book backlog as well. Back to you.
On to the latest in the Aircel Maxis case. Former Finance Minister and Congress leader P. Chidambaram is being questioned by the Enforcement Directorate. Since this morning, he has been granted interim protection from arrest by the Enforcement Directorate till the 10th of July. Remember, Chidambaram has been allegedly accused of giving an illegal FIPB nod to 3,500 crore rupees for the Aircel Maxis deal, bypassing the Cabinet Committee on Economic Affairs. India must take up trade deficit concerns squarely with the Chinese. That is the word coming in from former Secretary East of the Ministry of External Affairs. While speaking to CNBC TV18's Parikshit Luthra, he added that he expects the export of commodities such as diamonds, cotton and copper from India to China to grow.
Certainly, I mean, this is a concern. It's been a rising concern over the last few years. Chinese trade deficits have been rising with many countries. If you look around the world, you'll find most of their major trading partners are facing a similar situation. The US is a case in point as well. Of course, as far as we are concerned, if we export about 1/6 of what we import, then that becomes a major concern to a country like India. In a phase in which we are trying to concentrate on Make in India, in a phase in which need to consolidate and make sure that our economy moves ahead. It's important that we address these concerns and take them up very squarely with the Chinese.
Has the response been right so far, sir? Positive so far?
Well, I think the last round of bilaterals which we had with the Chinese, these concerns were put forth in a very candid manner. There has been some amount of progress, although if you look at the joint statements by the two sides, it really doesn't seem that the two sides are talking about similar issues. But at the same time, there have been some change, for example, in our exports in key commodities like diamonds, like copper, for instance. Cotton will receive a shot in the arm.
From the Indian side to somehow address this trade deficit?
Yes, of course, there has been a greater push, greater realization, and I think in India, everyone realizes the need to bridge this deficit as much as possible.
And with that, it is a wrap on this edition of Reporter's Diary. Many thanks for watching, but stay tuned to CNBC TV18. Coming up next is Money, Money, Money.